Let's invite Birlasoft. That's the next management on the show. The company reported a weakish top-line revenue growth, just about 0.3%, but margins have been strong for the second consecutive quarter, coming in at 18.2%. Angan Guha, CEO and MD of the company, is now joining in. Thank you very much, sir, for joining in. What should we expect in Q4? Will there be some furloughs which spill over from Q3 into Q4? And how does it set you up for FY27, considering that so far in the 9 months, you've had a mid-single-digit kind of a revenue decline?
So thank you for having me. So look, Q4, as you know, has got lesser working days than Q3. I don't see any furloughs going forward in Q4. We'll have to look at how our signings, that is our focus area for Q4 as well, pan out and execute for the quarter. But overall, we are feeling reasonably confident that the worst is behind us.
So Q4 should see growth over Q3, and what kind? 1 to 2, 2 to 3, or flattish?
Yeah, so look, we don't give guidance, as you know, Rima. So we will be focusing on execution as far as Q4 is concerned. A little too hard to say because we still see the demand environment being a little sluggish. So we'll see how it goes, but our focus will be to drive execution for the quarter.
All right. Hi, Mr. Guha. Good to see you, Wayne. Let's talk about the positive then. The margins are up around 220 basis points on a sequential basis, coming at around 18.2%. Now, this is the second consecutive quarter of strong margin performance. Could you tell us what drove that and what's the guidance from here on?
So, Nigel, look, I mean, as you've stated, we have done an incredible job on execution, which has really helped the margins. And as you would recollect, 2 quarters ago, our margins were about 12% EBITDA. We've moved the margins from 12% to 18%. So pretty proud of the team. The team has executed well. But you must also realize that this has got some one-offs. Of course, the currency has helped us significantly. And there are some one-off benefits that we have got, which may not continue going forward. If we can continue to execute and deliver revenue growth, then I think, we'll continue to do well on margins. Our baseline margins will be anywhere between 15 to 16%, and then we will work on improving from there.
Okay. All right. This has been a weak year, Mr. Guha. Given that we're going to end this year as well on a weakish note, how does it set you up for FY27? Will things be better in FY27 on low base of FY26? And if you could, hint with regard to growth, what could it be? High single digit, mid single digit? Do you want to guide for double digit? Tell us.
So, Nigel, look, we don't give guidance. And I accept your point. The FY26 really has not been a good year for us. As you said, in dollar terms, we'll have a decline in FY26. But one thing I can commit to you that FY27 will definitely be better than FY26. Now, how much better? A little too early to say. If we can have a good Q4, which is our focus for now, then definitely FY27 will look much better. The entire management team's job now is to focus on funnel, pipeline, deals, and then resulting into revenue growth. We fixed all the other parts of the business. Our margins are strong, cash flows are strong. So we have not lost a single client. We are delivering great signings. Now we need to really convert that to revenue. But we are feeling good about it.
Would you look at an acquisition in FY27, considering the strong cash on the company's books?
So look, Rima, we always, look at assets from time to time. But an acquisition can only happen if we get an asset which culturally matches us and what we want to do. Like I've always stated, we will never buy a company for revenue aggregation. We will only buy a company as long as it is a strategic fit for us. For us right now, we do not want to kind of digress from the fact that we need to deliver growth. If we can deliver good, strong quarter-on-quarter revenue growth organically, then we will look at something inorganically. But first, the entire management team needs to focus and deliver quarter-on-quarter revenue growth. That's our endeavor.
Mr. Guha, morning. There is one company, mid-cap, in terms of market size on the block. You're not looking? You're not interested? I mean, you won't, or have you looked?
So, Prashant, like I said, we keep looking at a lot of deals, right? But like I said, we will only do an acquisition once we are comfortable that we can sustainably deliver, revenue growth organically. Only then we will look.
When do you think you will be in a position to start delivering sustainable quarter-on-quarter revenue growth? Will that happen sometime in FY27, Q2, Q3 of FY27, or it'll take longer?
No, I think FY27 will be a growth year for us, Rima. And our quarter-on-quarter, I would suspect that starting, Q2 of next financial year, we should be looking at sustainable revenue growth from my standpoint. And it'll all depend upon how we execute from a signings perspective in Q4 and Q1. But like I said, I mean, I think the worst is behind us, and we are positively entering FY27.
Okay, all right. Final question. The deal TCV was robust at around $202 million. And I think the indications are that quarter four will be better than quarter three. Spell it out for us.
So, yeah, you're right again, Nigel. Q3, we had a very solid year in terms of solid quarter in terms of signings. I inherently feel Q4 will be better, but there will be some renewals that will come in. And I feel that we'll have a little bit of pricing pressure. But look, we are pretty confident to commit that Q4, at least from a signings perspective, will be better than Q3.
Got that. And in terms of a sectoral mix, this quarter, it was manufacturing which drove growth for you. What were the issues other than furloughs, which impacted the performance in the other verticals? And in FY27 or Q4, what should we expect in terms of a broad-based growth?
Yeah, so Rima, look, again, manufacturing for us, has been a laggard. If you really look at our last 3 or 4 quarter results, there were certain deals that we had won about 2 quarters ago that showed some ramp up in Q3. I still feel manufacturing will have a soft quarter in Q4. We will need another couple of quarters to turn manufacturing around, but we are making a lot of investments in this area. We are confident that starting Q1, Q2, manufacturing will turn around. As far as financial services and healthcare is concerned, financial services obviously had furloughs this quarter. That will deliver steady performance. ENU will deliver steady performance. Life sciences for us is, again, really a manufacturing business because we work with medtech companies. That will, again, take a couple of quarters to turn around. But, starting Q1, Q2, I'm pretty confident that all of our sectors will start showing growth.
Well, we certainly hope so. Thank you very much for joining us. It's a pleasure having you with us. Wish you all the best of luck as you execute, as you said. I mean, I think it's about bringing in, deals are coming. It's about executing, converting some of that into revenue now. So wishing you the best of luck.